What's up, y'all? So today's a special day. I'm talking with you guys about one of the most used confluences in my strategy. Okay, and this is very simple. Don't worry, it's only the third video, I understand. But, today we're going to learn about fair value gaps. We are going to learn about fair value gaps. Now, if you haven't, changed up your chart, if you haven't gone through to look at what there is, if you haven't, favorited some things, then by the end of this video, I want you to do that. I'd want you to check out, the time frames. I'd want you to basically copy what I have here, okay? Colors, it doesn't matter. You'll figure out your own colors. Obviously, if you have, a fucking box open, you'd want it to be a different color than, equilibrium, or you'd want it to be a different color than some of your other tools. So that's all you. But yeah, obviously copy what I have right now. Eventually you'll change it up to more of your own chart. But yeah, so a fair value gap. What is a fair value gap? A fair value gap is going to be a gap in the market that has price. Okay, a bunch of price or a little amount of price that has not been grabbed, used, and is just kind of sitting there waiting to be touched. You know what I mean? So our job in trading is to obviously figure out where these candles are moving. And these candles move to important points in the market. And obviously one of these points is going to be a fair value gap. So I really do hope my mic is not too loud. I really hope my mic is not too loud. Let's see. Is it too loud? I don't think so. Okay, so what do these things look like, guys? What do these fair value gaps look like? Well, that is pretty simple. They look like this. Okay? They also look like this. Okay? And they also look like this or this. Basically what I'm saying is they are everywhere in the market. But why are they used? Why are fair value gaps used? Now, like I just said, they're used because price, comes down to grab orders inside of those gaps. That's all we need to know about why they're used. Okay? Price wants to move into them to grab orders. It's our job to figure this out. So, how do we really mark out a fair value gap? Now, the gap starts inside of 3 candles. Okay, so the gap is inside of 3 candles. Now, the gap starts, let's just say we have 3 bullish candles. Okay, let's say we have, let's just use these 3. 1, 2, 3. Okay, so the gap is going to be at the start of the bike. It's a bike. The gap's going to be at the start of the bottom wick, and the gap is going to finish where the next wick is. So, for example, bottom wick, top wick. You shouldn't see, this wick inside. Of course, it's not going to be at this wick if there's a wick here. Okay? It's not going to look like this because even though there's no wick in here, there's a wick right here. So there should be no wick at all inside of your fair value gap. Okay? Another example is, we have these 3 candles, right? 1, 2, 3. Where is the fair value gap inside of these 3 candles? It's not going to be this because we're not counting this candle. We are going to start right here and we're going to finish right there, right? That is where it is. Do you understand? Right? The start of this wicks and the end of this wicks. Okay? Again, it's not going to be here at the start of this candle because there's wicks right here. Nor is it going to be down at the start of this wicks. No. Because why? Inside of this gap, why is there wicks inside of your fucking gap? It's not a gap then. It's just an area. We're looking for gaps that have actual no wicks. Okay? Not here. It's going to be here. Now, it's also not going to be here. You might say, well, Karl, there's wicks right here and there's wicks right here. What's going on? Like I said, 3 candles form the gap. Okay? Everything else is going inside of the gap. So, for example, this isn't part of the gap, right? This is the gap. This price going inside of the gap is, again, not part of the gap. It's just price going back into this void of price. Does that make sense? What just happened to my fucking shit, dude? What did I do? So, that should make sense. Okay. Now, let's make a trickier I'll give you a trickier example. These 3 candles. 2 of them are bearish, 1 of them is bullish. Where is the gap? Where's the gap? It's not this, so this candle is not part of it, and this candle is not part of it. Where's the gap? Okay? The gap is going to be from here to right there. It doesn't matter that this candle is different than these 2. Okay? Just because this one is bullish and these 2 are bearish does not make this fair value gap invalid. This is still a gap. And we will call this a bearish fair value gap, right? These were bullish, but since the gap is inside of a bearish candle, what is that? It's a bearish fair value gap. Okay? What does price do? Price creates this gap. Okay? Comes down here. And then we come up, back down. We fill it a couple times, and then eventually we shoot out and we target higher. Okay? That is what happens. Cool. So now I want you guys to see really what happens inside of these gaps. We are going to look at market open from today. Okay, New York session. AM. Here we have a gap. From what 3 candles is this gap created? Where is this candle located in? What 3 candles? This candle, and this candle. Why? Because the wicks of this candle starts the gap and the wicks of this candle ends the gap. And inside of those 2 wicks, there is a gap. Okay? There is a fair value gap, FFG. So what happens here is price creates this gap. Okay? Then we come into this gap, grabbing price, filling price, going back out, coming back down in, then eventually shooting out. So, and by the way, these gaps get a little bit more complicated, which I will talk about more in the future. But again, we are starting with the basics just to keep it simple. I want you guys to be able to learn, not become overwhelmed. Trading can easily overwhelm you. You know, analysis paralysis or market analysis paralysis is a real thing. Trading is supposed to be simple. It's supposed to be simple. We're not supposed to be fucking Einstein on the charts. That's how you get worse. You're supposed to focus on few things and just understand the basics. Okay, so as you can see, we had a bullish fair value gap. So it's a gap of bullish orders, up orders, okay? So when price came into it without closing underneath, price went into it and then closed above. We came in and closed back up. So what is price doing? Price is accepting bullish movement. Okay, price is accepting bullish price, moving market back up. Okay, so we had a small retrace down and now we're back up. Now you could have, well, I was actually trying to place a trade today and there wasn't a good enough entry because my retrace, the retrace I was looking for wasn't up here. It was underneath this low right here, and I was looking for a retrace in this area, which we did not sadly get. But you could have placed a lower probability trade, come out of this gap right here, or, my bad, if you're looking for a simple retrace, we came out right here. We even broke structure over this high, okay? And I'll talk about breakup structures in different videos, but stops underneath the FFG or the FVG. You could have targeted simple 1-to-1, even a 1-to-2, okay? You could have targeted a 1-to-3 almost with just this fair value gap. So again, what did price do? Price created a bullish fair value gap, retraced into it, came out, showed acceptance with bullish structure, and shot up. Boom. Okay. You could have targeted all of these highs. Okay. Now let's find a bearish fair value gap. Very simple, guys. And here's a very prominent one. Oh, and this one's cool too. Tell me what 3 candles created this bearish fair value gap, and tell me why my fair value gap right now is valid. Tell me why it's valid. Pause the video. It's valid because the start of this wicks creates the fair value gap, and the end of this wicks finishes it. There is a gap. Why is this candle inside? Because it can. Because it fucking can. Okay? The fair value gap was created from these 3 candles. 1, 2, 3. Not this one. This one is not part of the FVG. This one is visiting. So what happens? Price comes down, retraces into it, and you could have placed your trade after this super small retrace, which is fine, by the way. It's completely fine. Targeted. You could have easily targeted, you know, these lows right here. Easily. Again, you could have easily targeted these lows right here. Okay. Look at that. Boom. Okay. What did price do? Like I just said. In fact, look, this is a fucking awesome retrace. Not needed, but it's awesome. We have this gap. We come all the way from down here, back up here, and we close out. Why did we close out? We showed acceptance that price was going to move back down. Okay? That is what happened. Beautiful. Very beautiful. Okay? So that's a bearish version of a fair value gap. If that makes sense, I'm very glad. If this does not make sense to you, I want you to rewatch the video and try to figure this out. Now, for your homework, there's two things. Number one, like I said earlier in the video, set up TradingView. Log in, sign up, copy all this stuff. Okay, you have time frames to add. You have all these, things to add. You can color your chart. You can have some fun, play around. And for the second thing I'm giving you for homework, I want you to find 3 bullish fair value gaps and 3 bearish fair value gaps. Now, I want you to figure out where these FVGs start and finish on each single one. And I want you to see whether market retraced into these or not. Now, quick thing before we leave. These fair value gaps that I have shown have been accepted. They have been accepted. Now, what happens to this fair value gap? A bullish fair value gap. 1, 2, 3 candles creates this bullish fair value gap. What happens to this thing? Was it accepted? Did price come down and then back up out of it? No. Price came down, kept going down, even came back up into it, and then left, showing rejection. Now, we call this an inverse fair value gap. I love these things. It shows more proof that market is not moving the other direction. So we accept this bullish or bearish fair value gap, and then we come down here and disrespect this bullish fair value gap. So we inversed. Now, this would have been a perfect way to also place a trade just off a fair value gap. Obviously, I wouldn't place this trade because there's other things I'm looking for, which we will get to in the future. But yeah, you could have targeted those lows again and made a very, very, very nice trade over some time. If you targeted a simple 1-to-1 and had a break even, you could have great. Of course, we have you would have probably been stopped at a break even right there. Right here. But yes, if you want to, find 2 or 3 of those too. Find some inverse fair value gaps. Now, of course, that can work on any bullish or bearish fair value gap. Okay, so quick example. What do we have here? We have a big bearish fair value gap. Now, price did create this, then comes back up. It closes underneath, but did it fill the whole fair value gap? Did it move all the way up and down into this gap? No, so there's still a gap. What happens now? We come all the way back and we close out of it, and of course we then go up. So in this case scenario, you could have placed, if you had a bullish bias and really had no reason to go short, you could have waited for this bullshit to then eventually go through, inversing, and you could have placed your trade targeting even this high. Well, it looks like we only went that far, but this is a pretty good high to target. In fact, beautiful trade. Okay, so I hope that makes sense, guys. Tomorrow, or in the next video, we're going to talk about breakup structures. It's very important. Confluence, it's just as easy as a fair value gap. In fact, it's easier. So yeah, with that being said, I'll see y'all in the next video. Deuces.